we'll try this again.
We are, yeah.
Round 2, you're learning how to use plugs and phones.
Yeah.
It's a learning experience.
Well, it's very easy. It's color, so
we're growing.
We are.
It's a whole
work in progress.
Evolution thing.
Yes,
You're learning how technology works. So we had a bit of a misfire there. A couple 3 minutes into an intro, no one will ever hear. No. This is the real intro. We're back.
We are.
I'm Cody from Wall Street Breakdown.
I'm Matthew from Wall Street Breakdown.
It's fantastic to be back with you again. The markets are having an up and down sort of a time. They continue to do this as news from outside of the markets seems to really impact the market more than actual companies and share prices in and of themselves, right? Despite the fact, again, PEs way out to lunch, past historical averages. It doesn't seem like companies are looking poor when you look at the micro picture of things, but that big macro picture, I'm telling you, the global geopolitical economy is starting to look very on shaky ground, let's say, between trade wars in China, NAFTA not being done, Rusal over in Russia basically being excommunicated.
There's a couple things that need to be worked out.
From the aluminum business, and then on top of that, we have Russia now getting involved with the U.S. as U.S. had airstrikes on Syria.
Yeah, that's right. That's some serious business there.
None of this pertaining to the actual markets directly, but you know that there's always a trickle-down effect.
Oh, for sure.
So as we go through this over the next couple of weeks, you can imagine the trade war talks seem to be dissipating a little bit, but now the Syria-Russia conversation is probably going to take over as
majority.
No bad news in the marketplace, and media likes reporting bad news. So we know how this is going to end up going. Unfortunately, it's probably going to affect the markets going forward. But I think the sentiment still with people invested in the marketplace is still fairly positive despite what's going on in the outside world. My week this week was good, but it could have been better. I needed a little more gymming.
Me too.
I found that not making it to the gym as many days, because we were busy this week.
We were really busy.
Just really kind of, it didn't dampen the mood, but I feel like my exuberance level isn't to where it normally is.
Same here. I feel like I lost my gains.
You lost your gains?
I think so.
Do you know where you lost them?
No.
Do they have a lost and found for gains?
I think they do. Then maybe. They might.
We're going to have to find those gains. You don't want to just be losing those. You
worked
so hard for them.
So hard.
So hard. You know, I thought I was going to get a new co-host this week, but it didn't work out. It's you again.
No, I killed that chimp.
Did you?
No, I'm just joking. Did not do that. No, I love animals. No,
yeah, no. So you're back, but you're getting better every week.
Oh, of course.
I'm telling you, you're a well-refined man at this point. Like, there was a point in time when we started this where you were a simple lump of coal in the hand of a hobo, and now you're a diamond in a museum or something. It's really a transition.
Why, thank you.
Quite the transition.
That's very nice of you.
We're going to go into what happened this week. I'm going to let you lead like usual, just like when we dance.
Just like that, yes.
Just like when we dance. You go ahead and lead, and I'll give you the info.
Well, another week has come and gone. How was the markets? Were they up and down? Were they level?
It was fairly level. So like we've got a little bit of down, a little bit of up throughout the week. But for the fact of the matter, throughout the entire week, I think we're looking at still finding kind of that nice landing spot, even though obviously things move every day. So there's never going to be like a landing spot that you stick with. But I'm seeing over the course of the last couple of months, despite we've had a pullback since the high in January's, that I think we're around that tops, and I think people are starting to get comfortable with the idea that things maybe aren't overbought. Just the excitement level to continue buying has really dwindled down. So there's not a lot of moving around in the marketplace, but I don't think people are to the point now where they're selling off everything that they've made, and fear is running rampant.
I hope not.
People aren't getting into all the bond market stuff, even though the chatter continues to pick up. So the Dow closed the week 24,360, S&P 500 2,656, the Nasdaq 7,106, still above 7,000, the TSX 15,273. Up and down week, nothing too phenomenal as far as big movers and shakers, but a lot of the stuff in the S&P 500, the sectors that were up, were the sectors that were the most sold off, as we've been having that bit of a sell-off, like I said, since mid-January there.
Yeah.
Those were the sectors that actually had the biggest bump this week. So you can see that even sectors that have been sold, a lot of smart money is saying that even those ones weren't deserving of having that price cut. So people are getting back in at what they deem a very good entry point. So sectors in and of themselves in the S&P 500 still growing, but a few of them obviously a little bit inflated. right?
Inflated.
Little inflated, right? We've had
Right,
runs of semiconductors and stuff. Have had so many runs last year. It was so big that, I mean, you're going to find there's going to be you're even seeing pullbacks in companies like Boeing. So there's going to be occasional pullbacks, but some of the sectors that had the knees cut out from them when we originally had a bit of a pullback there a few months ago, starting to get a little bit of air again and get back up to where everybody else was. So gold, commodities, $1,344 for an ounce of gold. Oil up big time.
Yeah, that's
Huge
right.
Huge gains this week in oil, 67.39. And that comes on the heels last week of talking about the U.S. exports being the highest they've ever been, right?
Yep.
So you wonder why the price at the pump and the price of a barrel of
high.
oil. Like, I know OPEC is having, they're kind of constricting some stuff, and I don't know how much directly OPEC affects us over here, or the price,
sure.
the price of West Texas Industrial as opposed to maybe the price of Brent crude, because I mean over in Europe. But we're continuing to see the price go up, price per barrel go up, and obviously the price of the pump's going up. We're paying for it. We're paying for it, right?
$1.40 here, $1.40.
$1.40 a liter, yeah, pretty expensive. And I mean, some of that I would imagine is directly correlated with it's summertime, and summertime leads
it doesn't look like summertime.
Higher prices at the pumps. It's getting closer.
Oh, yeah, for sure. Definitely.
It's a little chilly, but it's getting closer.
It is.
We haven't had snow in 2 days. That's got to be like a record. For
that is, yeah.
Retail gas prices actually reached $2.70 a gallon on average in the United States a week ago, and that's the highest since 2015. So clearly, the price at the pump is being felt all across the continent as the price of oil continues to rise, even though exports in the U.S. for oil are at an all-time high.
How's that work out?
That's one of those things, the oil market, man.
Yeah, I guess so,
There's so much demand, maybe it's a lot easier to export it out and make more money that way than to keep the price low in-house. Who knows what it is?
Yeah, no doubt.
Bitcoin, $8,273 as of about 15 minutes ago. Bitcoin getting a bit of a bump here recently.
A little bit.
They were down around $6,000, right? And they're moving back up to 8. If I could tell you why, I would. I have no reason to believe that it has anything other to do than people just get in, they get out. It's not.
That's it,
yeah. There's really no rhyme or reason that I can still figure out, and I've tried to deduce it more than enough times. I've kind of just let it fall by the wayside and say Bitcoin is just kind of there, but it's not impacting me directly. And if I was to be giving investors any type of advice other than anything minor speculative in your portfolio, it shouldn't really be affecting you either. But it's something to keep an eye on because it continues to obviously have traction. It obviously does. Not near the traction it did last year. Not that that was maybe necessarily traction, probably more hype than traction.
Yeah.
But now it still has that little bit of it's moving in a direction, but we still are talking implementation. And that comes down to the end of it is when we find ourselves at a price point that we've all settled on, how then do we go about having Bitcoin be viable in an actual open marketplace and not something you're trading like casino money at this point?
I can't see it because it fluctuates too much. How are you going to use that in real world?
Maybe one day it'll settle down and it'll all make sense to us, Anthony.
Maybe
one day.
I don't have perfect world.
Yeah. I'm not holding my breath for it, but
maybe. Let's move on to economy. We actually got quite a few stories in here. I want to cover first NAFTA. That's been in the news lately a lot.
Yeah, I mean, the steel tariffs on Canada and Mexico come into play in the beginning of May. Obviously, the United States have the ability to extend the moratorium on paying those tariffs for Canada and Mexico, and it's all going to be predicated on getting NAFTA completed. All 3 country representatives that are working on NAFTA were at the Summit of Americas in Lima, Peru this past week. They were hoping to get things done early in the week. Conversations were that the U.S. is moving a little bit more towards favorable agreements with Mexico and Canada. They took a bit of a really hard line at first, trying to make sure that they were going to get what they wanted. And now from that really hard line they took, they're pulling back a little bit, trying to give a little bit back and meet in what they consider the middle. Obviously not what Canada and Mexico consider the middle, but Canada and Mexico need this agreement way more than the United States.
Oh, for sure. We definitely do.
So everybody going into this weekend, representatives from Canada and Mexico are all very positive that within the next couple of weeks, the meetings in Lima were positive. They're moving in the right direction. Like I said, America's come back on a couple of more erroneous demands that they've brought the percentages down a little bit. And I would imagine before the initial tariff deadline for Canada and Mexico runs out, then we have a new NAFTA agreement in place. But as of right now, no agreement to report. But I would imagine in the next week or so, we'll be reporting on NAFTA being re-signed, and we'll have all the particulars of how that's actually going to play out and what the new policies are going to end up being in NAFTA, which are probably going to be slightly more favorable to the United States than they were in previous NAFTA agreements.
Yeah, we need to get this done like ASAP.
Yeah, it's just kind of hanging in the air, you know. And the U.S. has so many things that they're balancing right now. Especially, again, we talk geopolitical. You mentioned Russia and Syria and Iran and all these countries, and you're dealing with, you know, the economy and trying to balance inflation and interest rates going up, and everything's kind of being balanced right now. And you wonder, you know, you have so many things going, you're juggling all these balls.
Right.
Something eventually may fall because you start spreading yourself very thin, even though you have thousands of people in all these different government departments that are operating on things directly. When you're talking about the president who has to deal with all these things on a probably much more macro level than getting into the minutia of everything, because he obviously trusts the people that are in charge. It's still, you don't want your commander-in-chief to be thinking in 10 completely different directions about things, about Stormy Daniels and Russia.
I want a straight line.
Yeah, you want him to have a nice, cohesive thought process so that he can get things done. So things like NAFTA that are really just like kind of a gnat at this point, it's not something that's really, it's not a cannibalizing the country or anything, but it's just that little annoyance that it's there and it's not done.
Right, yeah.
They can get this done. They can't fix Russia. They can't make China understand about intellectual property. They can try. You can lead a horse to water.
But they can fix this.
But they
tomorrow,
can fix this right now.
Yeah.
And because they're obviously directly involved in it. And they're the shot caller in the actual NAFTA agreement.
Yeah.
This is going to get done, and it's going to take one of those balls that we're juggling in the U.S. economy right now. It's going to take it right off the table, which it needs to, because it seems like, as this week has come to a conclusion, we may have bigger fish to fry, as obviously the U.S. and Russia start to have a bit of a measuring contest. Yeah, so that could get a little sticky. NAFTA seems like the last thing you want to be worried about.
That's very true, yes, yeah. Let's talk about bonds.
Well, okay, so there's not much to talk about in the bond market. It's just that people are starting to direct a lot of their clients over to bonds. The 10-year, obviously, people are, you know, they're looking to diversify their portfolio. They're not seeing a lot of good entry points. Obviously, the bond market it's sturdy. You're not going to have to worry about, you know, like the default on a 10-year.
You're not going to get rich off it.
You're not going to get rich off it, but it's a good place to park your money if you're looking to make 3% or whatever. Yeah. Morgan Stanley, a bunch of debt pushers over there, came out and they said they think a bunch of reasons is a good reason to start looking into the 10-year. And they said look into the 10-year. They didn't say jump right in with both feet or allocate enormous amount of your portfolio to that, but obviously it's something to start looking into, as I think everyone starts to agree that the top is around now and it's time to restructure your diversification. We talked about this. We've been in years where things run. Everybody runs because everybody was way oversold for years, right? When we're coming out of a recession, way oversold for everything to catch up. Everything in the sectors, as long as a company was doing marginal decent work, was doing fairly well. They were making up the losses that they were probably oversold on initially in years past, and then making up significant gains as all their peer group, stronger peer group, picks them up and industry entirely starts to run across the world. Now you find yourself at a top. So what Morgan Stanley, I think, is trying to say about it's a reason to look into bonds. And again, they mentioned volatility, increased geopolitical tensions, looming trade wars, and subdued inflation as some of the reasons you should look there. I think bonds are a good way to put a little bit of money in your portfolio into a different type of investment. It's obviously fairly safe, get that interest rate. But I think the best thing that people could be doing is, if you can't find a good entry point, it doesn't hurt to sit on the sidelines and do your homework, do your fundamental analysis. The way things are going to change now at the top, if you've never been at a top before, is you're going to have to now pick best of breed.
That's right.
In these sectors, you're not going to have 5 companies all run double-digit percentage gains year over year because they're all tethered to sectors that are way oversold. Right now, things are well overbought, PEs out of historical ranges. if you want to win with a company, unless we have any kind of correction like a drastic economical market correction and everybody comes down, your winners going forward, I think, are going to be best of breed. So you're going to have to do a little bit of diversification work on your portfolio to make sure that you're properly allocated to things that aren't the third best company in a sector. Right? Why would I be in Target when I could be in Walmart or Home Depot?
That's right. Yeah.
Unless you've got a really, really good reason you could tell me why Target is going to make a move. Because at this point in time, when I'm looking at P's like this, I think, Morgan Stanley says bonds as just another way to say the best thing to do is to look at other investments. It's been very easy the last couple of years to freelance and pick almost anything and be up. Now you're going to have to be a little more choosy, and you're probably going to have to kind of be good at it as well.
Yeah, for sure, definitely. The Congressional Budget Office came out this week. What did they have to say?
They just mentioned that they see the deficit topping $1 trillion by 2020, and by 2028 they see it topping 1.5 trillion. So again, they're using numbers from the past to try to get this number and making projections, obviously. And you've got a government right now in place in the United States that's doing everything they can to turn this deficit around, because this deficit is drastic. It's looming. It gets bigger every year. And the Trump administration is doing everything they can, trade wars, this NAFTA agreement, everything that you see that they're doing, the repatriation of money by adding corporate tax cuts, all that stuff is trying to help that deficit not see these numbers that are being projected. But again, these numbers are being projected from numbers from the past and not taking into consideration the moves we're making today and yesterday in the very short time frame when I think Trump's doing a good job of really focusing on this. People get caught up in the headlines. Trade war with China, steel tariffs here.
Trigger words.
But what he's concerned about is taking care of home base, and that being the United States, the most powerful country in the world, a country so economically robust that it should not be running any kind of deficit of $1 trillion.
You should take care of your home first.
And he is, and he's doing that. But he's taking a lot of flack for it, and people a lot of the time are missing the story. They don't get the reasoning because the salaciousness of the way the media plays it, because he's a bit of a villain.
Maybe not even the bigger picture they don't get.
Yeah, that's absolutely it. They don't understand that he's actually working for America about as hard as I've ever seen a president work. And he already figures, people don't like him, and he's like, I don't care what you think about me, then I'm going to go out and ruffle as many feathers as I have to get this done properly. Because ultimately, he's looking at this presidency, I don't think, as a power trip or anything else. He's looking at this just like any other business he's ever run, where he wants to be the best at it. So he wants to leave and have you look back 20 years from now when you don't remember Donald Trump's demeanor or his vernacular or the way he presents himself. And you look back in the body of work and go, wow, he took a lot of risks against a lot of different countries in an economic time where, everything was kind of teetering. The U.S. was doing good, but they weren't really prospering economically in the government sense. It wasn't coming back home, right? And he's trying to get that to be a reverse. And you got to admire a guy who's willing to put it on the line.
Oh yeah,
I love it every time. Every week Trump makes me smile. To have a leader like that. People don't appreciate.
No, they don't.
How difficult a job that is, and how good of a job he does.
To run a country,
like we said about the juggling, he's a good juggler.
Oh yeah, he's the best.
Poker face.
They
think a lot of that Twitter stuff is him being impulsive, and I think a lot of it is very calculated. Totally not impulsive.
I think everything he says is well calculated, thought out.
I think so too.
Yeah. Redbook came out with their chain store sales this week.
They did up 2.9% year over year versus 4.4% last week. So chain store sales down a little bit in that week over week year, but up year over year. It's a number that you continue to just watch as long as we don't see any kind of pullback. I don't think there's anything to be concerned with. Up 2.9%, well ahead of CPI. Everything. It's fine. I think it's absolutely fine. Chain store sales are doing well enough because people have the money to go out and. You have a little extra cash in your pocket, you walk into a store, and there's a good chance you're going to drop an extra $1 here, an extra $2 there.
Oh, for sure.
Pick up a frivolous item that maybe you've been thinking about but don't necessarily need. And that's the beauty of having a little extra capital. And it's good because, man, retail is not a strong business, but there are some really strong retail companies. This just goes to reflect that retail in and of itself, in the chain store sector, obviously, is still doing fairly well. So the chain store companies are running a pretty tight ship in and of themselves, as retail as a whole is still kind of struggling and probably always will be.
Probably,
yeah. It's always, that's going to be a real tough market to get into at any point now. But the ones that are entrenched in there, people still go.
That's right.
You're still going to the mall. You're still going to the store, right?
You are, no, definitely, yeah. President Xi, I think
it is.
Like that, came out this week about lowering tariffs or
So
something?
he spoke at the BOA Forum in Asia. So that's it's an annual summit. It's dubbed the Asian Davos. So in Davos, Switzerland, they obviously do that big meeting where all the CEOs and basically the most powerful and richest people in the world get together and talk behind closed doors and, collude to take over the world.
Right.
Yeah,
right,
basically.
Right.
So this is the same thing. A bunch of Chinese guys over in China colluding to take over the world in Chinese, though, instead of in Swiss. So it's basically the same thing. They're just not in Davos this time.
Right.
Yeah. But he actually came out and said a bunch of positive stuff, which is what we were saying. Was it, don't look at Trump putting trade wars with other countries as being like a finality. This is not like a thing that's going to be, this isn't he made this decision and that's it. And all of a sudden now there's these significant tariffs on a bunch of things. Like when we talked about it, you go look at CPI. This is the basket of goods in CPI.
That's right. Yeah.
85,000 different goods are looked at to get the CPI number, the weighted CPI number. When you take into consideration, you hear, 160 products are going to be, they're going to get tariffs on this. 150 over here, 10 billion.
But that's 85,000.
It's such a nominal amount of the actual trade these two countries do together. Yeah. They're just having a bit of an Old West standoff. They're trying to
even the playing field.
They're trying to see who's going to blink first. And at this the BOA Forum, President Xi, I think, kind of came around a little bit because he said that not only does he plan to further open the Chinese economy, which that in and of itself, if you're going to further open the economy, you automatically are going to have to adopt these intellectual property rules.
Oh, for sure.
You're going to have to abide by WTO standards. There's going to be a whole lot of eyes watching you to make sure that labor is done properly. Because the minute you say, they're already obviously a first world country, but the minute you then say that you are a first world country and expect to be held in that regard, and you come onto the same playing field on an eye-to-eye level with Japan, the UK, Germany, the United States. Now you've got to actually play ball, and I think they're going to do that because he also said that there's going to be tariffs on the U.S. imports are going to be significantly lowered. So on autos and a few other things, that's only a week removed from coming out and like making the pretty brash like comeback statement of, you want to tariff our stuff, we'll tariff your stuff. And then I think he kind of rethought that and realized that this is more negotiation. This
is a business deal, right?
Exactly. This is a business deal. Yeah. And they're going to get this worked out. There's no trade war.
No.
Trade war with China. This is our number one trade partner.
Clickbait.
Yeah, this is our number one trade partner. These two are going to get this figured out absolutely.
Yeah, not going to war. But household debt, how is that doing?
Okay, so this actually had me a little concerned. I talk a lot about taking a look at like watching credit card companies and watching those initial signs of people defaulting or signs of people being way over leveraged. And you see it start to creep up whenever a market takes even a slight downturn and interest rates and inflation start to make a bit of an uptick. But this housing number, it's not really related to defaults, but when you look at the percentages, you start concerning yourself with the fact that this could be a catalyst for future defaults. So 20% of conventional mortgages this winter went to borrowers spending more than 45% on their mortgages and other debt payments, meaning that they've obviously got less capital to go around for any kind of issues that might crop up. Lose your job, break your leg, large medical costs, whatever it happens to be. More of your net income per month is allocated to the stuff that you need to be paying for, mainly your house. The big concern is that's triple the amount from 2016 and from the first half of 2017. And that is the most since the mortgage crisis. So we're talking about banks out there or lenders out there giving people a lot more slack when it comes to actually financing a house.
It's kind of scary. That's really scary. They should not do that.
Yeah, because I mean, we know the government continues to stress test banks.
Yeah.
So we understand that banks are still, they have to keep a certain amount of capital. That they really have to keep good buffers in all the different areas that they work in now. Since 2008, 2009, they really got to hunker down and make sure that they've got things under control. And the government comes in a couple of times a year and does basically a full audit to make sure that they're up to standards. And if they're not, they're given a specific time frame of when they can get back to, when they have to get back to that standard in that specific sector, get back to a certain amount of money under management they have for risk and all that. But when you look at this, you just say like, are we getting too loose? Have we given enough? Have we given all the money to the people with the good credit? And now we're getting back to that where everything's so good. We're looking to continue to lend, but there's not enough good creditors good credited people that need the lending at the moment, because everybody's got what they got. And now they're starting to maybe give it to people that are more middle of the barrel. And you start wondering at what point
does history start repeating itself?
We've seen this enough that the minute the bottom dominoes start to fall, they drag a lot of people down with them, right?
Once the floor crumbles, right?
So, I mean, when you take a look at that in a nutshell, I see that and it concerns me that maybe that might be a catalyst to putting a lot more people on the hook that can end up ultimately paying for it down the road, if the beauty of what is the United States right now with unemployment at historical lows and all that starts to change, and those bills start to feel a lot more daunting. And now you're 45, 50, 55% of your net is allocated to this specific bill over here, which is well out of the range that it's been recently for the majority of people getting loans for houses. So we'll see, but this is something to keep an eye on. One more news I got, Puerto Rico, they received $18.5 billion grant from the U.S. Department of Housing and Urban Development. Of course, we know Puerto Rico at Hurricane Maria did some serious damage over there. Puerto Rico requested $46 billion, but the United States only gave them 18.5. Now, this is the largest grant they've ever given anyone.
Really, anyone?
But I would imagine that because Puerto Rico wanted more and it's a calamity and Trump's in power, that for some reason Trump's to blame here. And they didn't give him enough. And of course, there's got to be some sort of issue. But Puerto Rico, at least the United States, like usual, not getting the credit they probably deserve for the helping hand they continue to put out. I've got some other just statistics. Speaking of CPI, which we were talking about actually a little earlier, March CPI came out down 0.1% versus a 0% estimate, so that missed just a little bit. Core CPI, though, up 0.2% versus being flat. And core CPI year over year up 2.1% versus a 2.1% estimate. Core CPI up 2.1%. They want inflation to be up 2.1% year over year. That's right in that wheelhouse of inflation, right?
Yeah.
That's what they want, is around 2%. It's been, 1.9? That's been the big concern, is they couldn't really crack 2. Well, there you go. Year over year now, we're at 2.1. So I would imagine Jerome Powell's probably looking at that saying like, okay, we're making incremental headway to where we're looking to go to get everything balanced properly. We're going to continue to get interest rate hikes. We're going to obviously see this inflation number probably still try to get to about 2.3, but they're going to definitely try to keep a cap on it, not let it get out of hand. And that's obviously why they're micromanaging it now and trying to manipulate it with government manipulation, as opposed to just allowing it to become its own Frankenstein monster. And then you're trying to take control of something that's well out of control. MBA Mortgage apps still having a really rough week, even though the 30-year was down to 466 from 469 the last couple of weeks. That didn't matter. Refinance index down 2%, purchase index down 2%, composite index down 1.9%. So not nearly the drastic percentage declines that we've seen in previous weeks, but still we see a lot less activity in the mortgage business. The Atlanta Fed came out and said business inflation expectations, so this is inflation for businesses, is expected at 2.3% versus 2.1% prior. So again, that's inflation up there, 2.3 for businesses, right? As opposed to CPI, which is obviously the price for consumer goods. And that's the highest number since the Fed started tracking this in 2011.
Yeah.
So prices are going up. Prices are going up for businesses to do business, and prices are going up for people to be buying things prices
Right.
are going up. U.S. job openings, 6.052 million in February versus an estimate of 6.143. So job openings missed the estimate slightly, but like we know, lots of jobs, wages per hour slightly going up, and obviously unemployment at absolute the bottom of the barrel levels.
Yeah.
It is. You could go out and get a job in half an hour in the United States.
Oh, for sure.
Yeah. Just
Before we move on to headlines, I do want to cover one topic though. There's been this little bit of a headbutting going on between the U.S. and Russia over this aluminum.
Okay. I don't know the particulars of why Rusal has basically been blackballed from the Western world industry.
Yeah.
We do know that Rusal is obviously... Okay, so Russia's an oligarchy. Rusal is obviously in the pocket of the Russian government, just like any other major business. Rusal, one of the biggest aluminum producers in the entire world, the biggest outside of China in the world. China has they have the biggest ones, but Rusal, outside of China, the biggest in the world. Obviously, the sanctions are probably to do with the fact that we've kind of dealt with China and their steel and aluminum by tariffing things, but I don't know why Rusal got treated in a different way. I haven't really been able to find a really good answer, and I'm sure it's very political, and due to the fact that Rusal has the government that they work with, basically in Russia, on their side, helping to, let's say, skew the prices in the market. They're so big that they have the opportunity to do things like flood the market, skew prices, and that's what ends up holding back American companies where things cost more, because you obviously have really strict labor laws and all that. So there's a much higher overhead for a company like Alcoa than a company like Rusal. So I think what the issue is that we were able to deal with China directly, but then you've got this other kind of looming company over there that can still very much influence the marketplace in a negative way. I guess the United States sees them as not really a business, more so as an issue.
Right,
and
yeah,
they
for sure.
really boxed them right out, and people followed suit with it. So aluminum prices on the week up 15%, and actually aluminum, the thing you get out of the ground to make aluminum, it's aluminium or something the
like
powder,
that, yeah.
whatever it is, that actually was up 30% on the week, because aluminum around the world is actually not in any kind of stress right now. There is an abundance. It's there.
Yeah.
People can meet needs for aluminum at the moment. But in the aluminum production, the stuff that makes aluminum is actually fairly scarce. So when we found out that aluminum was going to be a lot less tangible around the world, as some of the biggest producers get handcuffed with being able to send things anywhere they want anymore, we now find that it's actually the stuff that makes aluminum that's the stuff that people are finding the most important, and that's going to be where probably the most shifting around is as people start to fight to try to get that pipeline to them. Right. So aluminum prices up 15%, but the actual product that makes aluminum up 30% of the week. That was the best week for aluminum in 3 decades.
Really?
Yeah. So
3 decades.
Yeah, the biggest increase for aluminum in 3 decades. So we're talking $2,325 a metric ton. And again, most of this is tied to sanctions of Russian producer Rusal. U.S. sanctions block Rusal from all the Western markets, and the world's biggest metal exchange in Chicago and the CBOE stopped accepting new Rusal supplies. So like the U.S., not just the U.S. government, but the actual exchanges in the United States on board as well, saying, forget it.
No.
Not over here. We're not taking any futures contracts for your stuff. We don't care. You're basically out of the market. So like the Russian government actually had to come out and say that they were going to do everything they could to prop Rusal up as they found a new way to kind of manage this, because WTO has rules where like all the companies or all the countries that are in the WTO, if you start having other countries that make a product in abundance that start losing pipelines that they can get rid of that product, having an overabundance of it, they can, if they ship it to you and they ship too much of it and they start flooding your marketplace with the fact that they've got backlogs. So they start flooding marketplaces. Things start showing up on shorelines and in shipping containers. Boom, there's more of it than people expected. Right. The WTO has a rule where a country can say, if I think that this actual importing of this product at the level that it's now being given to my country is going to affect my internal economy, I can then say no at the border, and refuse to allow those imports to come in. So Rusol's not going to be able to go ahead and just dump.
No,
They're not going to go and be able to just dump cheap aluminum to try to. There's going to be other countries going like, there's far too much available now because you're only able to sell to XYZ number of countries.
Exactly, yeah.
So the WTO has rules where you can't just come dump everything and expect people to just take it in, even at a cheap price, because it ultimately skews all the different stuff in your economy. So you still need a nice, steady, balanced stream of things coming in and going out.
True,
and not major influxes of stuff, just where other countries or other companies are trying to get stuff off their books.
Yeah, just dump it on
So
you.
as Rusal probably got quite the supply, it's a matter of where those supply lines are still open, and it doesn't seem like they're open really anywhere fantastic at this point. Rusal
No.
gonna continue to put it into China, I guess, push it in there, but China's pretty aluminum thick on their own. So
Yeah.
we will see how this all plays out. And obviously we had these attacks. The Syrians,
That's right,
Assad apparently used some chemical weapons. Again, for a second time, Trump said he was going to go in and do something. We know that Russia is tied in with Syria and Iran. It's a very strategic area down there. A lot of unrest, obviously, in the Middle East. And Russia, who's quite militarized in the Syrian area, said, if you come in here, there's going to be repercussions. And Donald Trump said, we don't care. And they strategically bombed sites around Damascus the other day. Great Britain, France were involved as well. You can only imagine all the other countries sitting idly by saying, if Russia decides to get a little froggy, if they're going to die on this hill to defend Syria, and this Assad guy who's gassing his own people.
Well, if he's going to gas his own people, what stops him from gassing the next person, his neighbors or anybody else, right?
Russia is not looking very favorable right now. And we understand that when you talk about why they protect Assad, it's completely strategic in that region. It's the fact that they found themselves nicely entrenched. I don't think
they just like the territory.
They like the territory. It's totally different. But because they're tethered to Iran and Syria, they make Saudi Arabia very nervous. They make Israel very nervous. Now talking World War III through the media, those are big words to be talking. I would imagine countries like China and stuff have their good eye on Russia. And this is a lot of pomp and circumstance. I don't think Russia does a lot of retaliating to try to protect Assad.
No, I don't think so.
But I can imagine that Russia and the U.S., as far as their diplomatic arrangements, and
I think they got a good repertoire between.
I think they do between Trump and Putin on a respect level, but I think both of them have an aura to upkeep. So I can imagine this is probably going to go on a lot longer, but probably just in headlines more so than boots on the ground.
Oh, for sure. Yeah, definitely. Well, that wraps up the economy. Let's move on to some juicy headlines.
So it's time. Wait. So it's time for the headlines?
It is.
So you know what I was going to do for the headlines? I was going to crack another Monster. Shout out to Monster, by the way. I really wish they didn't use all that fake sugar in there. I'm on this keto thing, and it really adds up. So I got to move over to Red Bull. So I was going to crack a Monster, but then I thought about the headlines that we have. There's so many headlines from this week.
So many.
I only need a water because this is exhilarating enough. So let's move right on. Give me the headlines.
Tesla's been making a lot of headlines this week, but it seems like they're going to have some positive cash flow coming up.
Okay. Yeah, we heard that, didn't we?
We did.
So what we heard this week from Tesla is they're recalling 8,898 Model S's in China to fix a bolt in the power steering component. Hopefully that's not a really important bolt. Hopefully everybody over there in China is getting those vehicles fixed ASAP. There's 8,898 Model S's in China.
Yeah.
In China. You know how many people are waiting to get Teslas in the United States?
Too many.
Man, 9,000 recalls over in China. I didn't know there was 9,000 Teslas around the world yet. I thought most of them were mainland United States.
Me too.
So maybe that's why they're not able to fill any orders.
That's right.
They're sending them everywhere else. So we did hear Elon Musk came out and said that they were expecting. Now, let's not, again, this is a man who has a history of overpromising and under-delivering.
Yes.
But there's been a lot of news about debt being due. Solar City debt, very short term, due very soon. We know their credit rating has been going down.
Yeah.
Right? We've talked about the next thing they might have to do is a convertible bond debt issuing. They don't want to be doing that, obviously. That's really we're talking last bastion of raising capital. Tesla, though, Elon Musk said he sees cash flow positive Tesla in Q3 and Q4 of this year.
Yeah,
so
that's
3
right.
months from now, they're going to actually be turning over cash. They haven't done that before.
No.
How they're going to be doing that, I'm not entirely sure.
The Narnia factory.
Apparently, production continues to ramp up to the point where they've figured it out. Either that or this is a really, really brash statement from someone who's trying to not get shareholders and the cachet that Tesla has in the marketplace from losing any more sentiment. So he's trying to save a little face, but this is going to be a very short-term thing if we come Q3
That's right,
and they're not
very
cash flow positive, because he said in a tweet where you could tell he knows that the market knows Tesla's been in some turbulence recently.
Yeah.
He said, so there's obviously no need to raise money. So he acknowledged that there's a lot of chat about Tesla having to raise money, but I guess inside the books, Musk is very, very certain that there will be no money raising that's needed to service this debt. And by Q3, Tesla's going to be turning over some actual earnings.
Hopefully they are.
So we'll see. Also, the Model S or Model Y SUV is expected for November 19th production in the United States. That's November 2019. And 2021 for production in China. Be expecting to be getting recalls for bolts in your power steering, China, in 2022. So yeah, Tesla, lots of little news, and that's how it's kind of been for Teslas.
Yeah.
Little smoke here, little smoke there, little smoke here. We talked about this yesterday. At some point in time, people start to say there's too much smoke, there must be fire. They really, really need to get this profitable in Q3, Q4 thing.
They do.
Right.
Right now.
They need to get that right. That statement better be a factual statement, or this company could be being pulled back into territory that it has not seen in a very long time. Let's face it, it is not a tech company. It is a car company, and it has the price to earnings as if it's a speculative tech company at absolute best. So there might be a righting of the ship in that marketplace, and there might be a come to Jesus moment for some Tesla shareholders and for Elon Musk. And for everybody who's developed this ether of belief that Tesla is this next generation something, when in reality, they're just a car company that doesn't produce a lot of cars.
Yeah.
So let's find out what's going on, but make some money and make those promises stick this time.
Yeah, hopefully they find their groove. There's tons and tons of Apple news this week, so let's talk about that.
Yeah, nothing crazy coming out of Apple, just lots of news. They've got a red iPhone 8 and iPhone 8 Plus coming out.
Ooh.
Yeah, it's exclusively used to raise proceeds for fighting AIDS in Africa, because it's 2018 and we're still fighting AIDS in Africa. I
thought that was dead already.
Yeah, no, apparently really slow to the gate, these guys. We're fighting AIDS in Africa. So we're selling red iPhones, though, and those, they started pre-orders on Tuesday. They started shipping on Friday. There's no price increase from the regular version. You just get a sweet red phone.
That's it.
That's it. It's just a sweet red phone. Apple coming out with a nice new little extra. If you haven't bought yourself an 8 or an 8 Plus yet, this might give you a little incentive to get into that marketplace now. I would imagine, I haven't seen it, but I would imagine the way they pick their very streamlined color schemes, that it's a very nice red. I'm assuming it's a very nice red. Apple has reached their goal of having 100% of all of Apple's infrastructure around the world powered 100% by renewable energy. That's all their manufacturing facilities, their offices, all their retail spaces, everything. 100% in Apple's infrastructure that's run by Apple is 100% powered by renewable energy. That was their goal. They set out to get that done, and Apple has reached that goal. If you're
At least somebody's making their goals.
Apple's their home pod, is that what it's called? HomePod?
HomePod, yeah.
HomePod not doing very well.
No, it's not.
No, they're having some hiccups. It doesn't have near the options of Google or Amazon's. Yeah, so they're having some issues with sales and stuff like that. Projections have been pulled back, but Apple, for the most part, though,
they know what they're doing.
They know what they're doing.
For sure.
Apple Music, they came out this week and said they've got over 40 million paid subs now in 115 countries. They named Oliver Schauser the new head of Apple Music. He's been with Apple for a long time, so just moving up to run the division. But 40 million paid subscribers.
That's a lot.
The music business, right? It looked like it was dead. There was no money in it.
That's right,
and
yeah.
people have found a way to remonetize music. It's in a much different way.
Oh, for sure, yeah.
But it still seems to be working on a subscription basis through Spotify, through Apple, through all these other services. So good for these publishers, good for the artists. We've found a way to make art that everybody loves. Music is...
universal. Everybody.
I mean, it started to make it at the beginning of the 21st century not really that viable to be in the music industry anymore. If you weren't a headlining act that was on Entertainment Tonight or whatever, I don't know if that's even still on, but like if you weren't somebody who was in the media, it was going to be a really tough go of things. And a lot of times that's connections and people writing music for you and just a whole lot of luck of the draw. There wasn't that middle tier of musicians who could sell, the 500,000 albums anymore, which, that wasn't great back in the day. You talk 80s, 90s. Good artists sell, 8 million, 6 million copies, but to sell 500,000, you could have a whole career as a musician that could go on for 20 years with a strong fan base and could tour and all that.
Sure.
But once that got removed, it became basically you sold next to nothing and you had to rely on your touring. And it's a big difference when there's so much free music available. Nobody's just going to spin that same CD over and over again.
That's
so
right,
you become very passé. So how do you stay in people's minds? These companies have done a really good job of at least remonetizing music. It's still making music very selectable. You could choose so many songs that obviously one artist could easily get forgotten by you.
Easily.
But still, they're monetizing it, making music viable again for what I imagine is that middle tier of musicians who aren't major mainstream artists, but are still making earning a living because of companies like these who monetize music. So Apple still doing good stuff in most venues that they are. Again, speaker not doing great. Federal judge rules that Apple has to pay VernetX $502.6 million due to patent infringement. VernetX patents for secure communications. They use them when creating FaceTime, apparently, VPN on demand, and iMessage. This legal battle started way back in 2010. Now, the Patent Trial and Appeal Board has ruled in favor of Apple. So if VernetX doing their appeal on the verdict there from the Patent Trial and Appeal Board doesn't go through, it won't make a difference about this judgment because ultimately that judgment reigns supreme. So VernetX, while winning in federal court, needs the Patent Trial and Appeal Board to reverse their decision and give them the awarding too, and then they'll actually get $502 million. But I would imagine Apple is probably going to find a way, like usual, to circumvent most problems.
Oh, I'm sure they have it covered. I'm sure
they have it covered.
Mark Zuckerberg met with Congress this week to discuss Facebook privacy concerns. I guess some of their data got leaked out.
Well, yeah, we talked about that, right? Cambridge Analytica, they had all the Russian money that came involved during the advertising of the political campaign, where obviously there's been no ties that were connected between Trump and the Russians. But I think Facebook has had so many issues with things sneaking through their system that they're just getting a lot more strict. And we've seen this now for months and months now with the way advertisers are dealt with on there, the way certain accounts are dealt with. They don't play with a lot of stuff on Facebook now. You'd be quick to be excommunicated from Facebook if you don't play within the landscape of the rules.
That's right.
And that should be the way it is. And that made Zuckerberg meeting testimony with the House Energy and Commerce Commission and with the Senate a lot easier, because he was able to sit down and say, like, we've got a body of work saying we're fixing this. We've been fixing this long before this scandal ever came out. We understand privacy is of the utmost concern, right? We understand we're a data gathering company. We understand we use that data to monetize to our customers. We don't want to have a pay structure, like a pay wall, where people pay $1 or $2 a month to have their data not used, but they have to pay a subscription fee, because Zuckerberg says then that boxes out a good majority of the world, and Facebook is supposed to be all inclusive. So free with data gathering is kind of the way you end up having to make that trade. You understand that when you sign up for Facebook or anything else, that a lot of that stuff is, it becomes their property as well. So when he sat down and spoke to them, I think he did a good job. I was shocked. He wore a suit.
He did, yeah.
You never see the guy in a suit. He wears that same shirt. He doesn't like to make too many decisions. That's why he wears that same pair of
Frees
clothes.
up his brain for bigger decisions.
Exactly. Doesn't like to waste the decision on the clothing. Looked good in the suit and was very, very concise. Took responsibility. Sounded like someone who really cares. Does not sound like...
he was trying to put the onus on somebody else or anything like
absolutely
that? Yeah, no.
not. And he doesn't come across like Facebook is more important than people, or that Facebook, like is your world leader and that you need Facebook more than Facebook needs you. He understands that it's a community and he wants to protect his community.
It's a public domain.
But when the community gets so big and there's so many loose ends, that the idea of being able to tie them all up and then blaming them on Zuckerberg directly, or the company as an overlay and saying like maybe the company had something to do with it, is obviously not in their MO. They're trying to do things to make it, like a safe playing field for everyone. Yeah. They want people to feel inclusive. We've seen recently user data from people in some of the most important age ranges, the age ranges that are going to take Facebook into the next generation, have started to go down a little bit. So Facebook doesn't want anything poor to happen in the mainstream. They're already having a difficult enough time keeping eyes in those 12 to 35 age range on Facebook's page for as long
not
as
leaving, right?
Exactly. Or not spending their time elsewhere.
That's right.
So Facebook, I thought it came out looking good. It was up throughout the whole week. Zuckerberg looked really good. Again, I think people thought they were going to catch this kid kind of wide-eyed and scared, and he's very composed.
Oh, yeah.
He's a little awkward.
I think most people like that are a little awkward in a sense, though.
He's eccentric, maybe. Is a better way.
Because if you look at Elon Musk, he's a little awkward though when he talks and his mannerisms.
Maybe, right? I do find Zuckerberg to be, he's kind of robot-y. Like he seems, he's like very eclectic, but the guy has it together. He has a game plan. His head's in the right spot. He's really running Facebook, I think, in the right direction from literally the right spot in his heart. He is not trying to be power hungry.
No, I think he's running it the way it should be run in a sense. I think if somebody else came in and tried to operate a different way, it would change everything that Facebook actually is.
I know people don't like the fact that the data is out there having to be shared, but
stop clicking on links.
Facebook needs to monetize somehow. They need to make money to stay in operation.
For sure, yeah.
So, I mean, as a business, they're going to do that. And they make you privy to it when you click the buttons. And if you don't read the terms and services, it's
kind of your fault.
Yeah,
too,
and
right?
Sure, Facebook needs to do more auditing of the companies they allowed to get that data. Obviously, that was the big problem. I mean, we heard actually, what was earlier this week, another story about Apple was that Apple's plumber department
that's right,
went in and found, I think it was 29 people last year inside their own company that were, and again, now we're talking about Apple and not Facebook, were leaking proprietary information in some way or another, or making proprietary information a lot more accessible, more than it should be. 12 of them actually got prosecuted out of the 29. All 29 lost their jobs. They didn't say if any of them were associated with each other. This is 29 throughout the company. But you can just see these big companies are even deep diving into their own people and making sure things are on the up and up.
But I think you have to do that though, right?
But the further out things go, like you allow Cambridge Analytica to have access to data, and now who on their end has access? So is that a Facebook problem? Is that Facebook's fault, or is that the other company's fault?
I think that's the other company's fault.
So,
once the data leaves Facebook's and it goes to that other company, then shouldn't that not be Facebook's problem anymore?
They're going to get blamed because they're the source and they're the big name and they're the face where you could point, and they, like nobody has a vested interest emotionally in Cambridge Analytica, but everybody has some sort of opinion on Facebook. Probably mostly good, but there's probably a lot of negative opinion out there because Facebook's been around a long time. I'm sure tons of people are sullied on Facebook at this point, right? So the buck is going to stop somewhere. I thought it's not on their shoulders specifically to stop leaks on a third party's end, but Zuckerberg still, like a real man, stood up and said, I'm going to fix it. You just watch. We're on top of it. And we know Facebook's hired, what was it, 10,000 or 20,000 employees this year for security alone. It was either 10 or 20. It was an exorbitant number. As advertisers were talking about pulling out even more, Facebook was like, we're going to do everything we can to secure this as best. They're getting this ship airtight. And good for them. They continue to work on it. I thought Zuckerberg looked great.
For sure,
Put on the pressure cooker, I thought he did a really good job.
Oh, for sure. Another dominant company here. We got Boeing. and we have quite a bit of news from Boeing. We always do.
Typical, yeah. There's always a story, right? So Indonesia's Lion Air Group has announced a $6.2 billion purchase of 50 737 MAX 10 jets from Boeing, the newest and largest of Boeing's narrow-body planes. They continue to build significant backlogs of planes that won't be delivered till long after we're dead. Because, right?
Yeah.
I mean, how many years is it going to take for Boeing to fill all these orders? They've got a backlog of like 5,000 planes right now.
Yeah, that's a lot.
Yeah, it's growing and growing, but it doesn't seem to stop anybody from wanting to be involved with them, as opposed to, let's say, Airbus, where we see companies decide to not go with Airbus and then choose to go with Boeing pretty frequently, still knowing that you're not going to be getting your planes for a bit of time.
But they have that strong
That's
name
right.
though,
And speaking of planes, India's looking to get into the big time. Apparently, they're strengthening their air force up. They're going to make a long overdue purchase of 110 fighter jets. So watch out for India. They're getting out there for their air force. The deal could be worth more than $15 billion. Again, this is long overdue, as India's Air Force is well past the due date and needs a revamping seriously. They're expected to already be in talks with Boeing, Lockheed Martin, Saab, and Dassault Aviation as to who's going to end up getting the contract in the end. I'm going to go out on a limb and say Boeing.
Probably,
but that's just me. That's
Yeah.
just me. I'm going to go out and say Boeing. We'll see how it all plays out. But that's another big contract looming for one of the big aviation companies out there.
Big aviation company.
$15 billion. That's a big contract.
Yeah, that's not a small contract. That's pretty big. 15 billion?
Yep.
That's a lot, yeah.
Okay, so you want the rest of the headlines?
Yeah, give it to me.
Okay, so Novartis, drug company, Novartis AG is buying gene therapy company Avexis for $8.7 billion. You might ask, what's gene therapy and why would you pay $8.7 billion for it? Obviously, Novartis looking to spread out their pharmaceutical company into the gene therapy division. What Avexis has right now, what their ace in the hole is a drug that's in second stage FDA approval right now and doing very well by all intents and purposes in trial runs. What they have is it's a drug for when you're born and you've got a corrupted gene. So you're born and a gene that was supposed to be properly written out in your DNA is incorrect and it's corrupt. They've actually got an ability to go into your body and change that corrupted gene to have the proper, whatever you'd like to call it, zeros and ones.
So they're going to put like Dennis Quaid in me and they're going to...
Something to that. What they actually do is they weaponize a virus and they put the right gene
and it attacks
inside the virus and they send the virus into that person's body. And because that virus is weaponized to use whatever it has inside of it, it starts to spread the right gene. And that right gene becomes stronger than the bad gene. And ultimately, it overtakes the bad gene. It rewrites itself and corrects things. So obviously, second stage FDA approval right now, very, very far out from being any kind of therapy you're going to see available.
Very intriguing, though.
Very intriguing. Novartis found it very intriguing. $8.7 billion worth of intriguing. Viacom and CBS continue to go back and forth as they're trying to basically get back together. They are the same company. They were just split apart. They still have a company that owns basically both of them. They're just trying to get everything back together, but both CEOs kind of bumping heads in regards to a few things, the price, not only that, but like what will end up being the power structure at the end of things, whereas Les Moonves has guys he wants to be in control if they get back together. Obviously, the guys over at Viacom, very similar things. So Viacom's asked CBS to raise their merger bid $2.8 billion, almost a quarter more than CBS's previous offer. This would give Viacom shareholders 41.5% of the merged companies. PayPal is reaching out to customers about basic banking. How about that?
That's
PayPal, an online bank that doesn't do retail banking, since it has no actual banking license yet. It's using other banks as the backdoor of business right now, but this is their first feelers out there into getting people into doing, checking accounts and having a PayPal debit card, just seeing how this is going to work. There's no word on who PayPal is using as their backdoor.
Right.
Somebody's going to be doing all the back office work because they don't have the license. They're basically just the front lines. So somebody's going to be doing it. I would imagine it's going to be a really big bank, but there was no word on who it was going to end up being. Obviously, PayPal probably has some really good connections.
I can see that taking off. PayPal,
Think so?
Yeah, I think so. I think a lot of people that use the internet and all that, that use PayPal on a regular basis, that does all their shopping online, probably use that.
They charge too much. When I use PayPal, they charge me
They're going to have to be a little bit competitive, though, right? Because they're going to banking. They're going to have a little
Oh
bit
yeah,
of competition.
in retail
right?
banking, they're going to really have to change some of their pay structure because like you use PayPal on eBay and you're almost forced to have to use it, and it is far too expensive. And when you buy stuff, we're Canadian. I buy stuff in the United States. I got to convert money to American, and they charge me to convert money. Or when I sell something and I sell it to an American and it comes in American funds, they charge me to convert to Canadian to put it in my bank account. So there's a lot of hidden fees between eBay and PayPal. So while PayPal's moving into this, and that's probably obviously their next step or one of the next steps they have to make to continue to grow, I'm very leery about using them over and above a very steadfast retail bank that I know is a lot more predictable.
Right. I'm pretty sure they'll have like some sort of bonuses or something for signing up for their banking. You'll probably get maybe deduction off for your purchases online using eBay.
They'll definitely be incentivized in regards to eBay. I'm sure that kind of stuff will happen. But what if you're not using eBay? Right? What if you're just using PayPal as a whole? Like, it's going to end up coming down to dollars and cents. And if it's not more profitable and not more convenient to use PayPal, I'm not tethered to them enough. Even though I've used them and been around since they were a part of eBay, and I'm not tethered to them any more than I am to anybody else. It all comes down to service and price.
That's right.
Convenience, that stuff. That's all I'm concerned with. I'm not concerned with your name.
That's right. No,
it's all the deposits are guaranteed by the government up to $100,000.
That's right.
So
that's right.
I'm taking the bank that's charging me the least. Alibaba, speaking of banks, leads a $600 million Series C, so that's the third round in facial recognition software company SenseTime Group. The Wall Street Journal has this company already valued at $4.5 billion. Alibaba getting well invested in a lot of things, as that's not the only story that we have out of Alibaba this week. They're in everything. People do not realize that they are definitely the Amazon of the Eastern world, and I do not think us over here in the West give them enough credit for how much space in a marketplace in the world they're going to end up taking up.
I don't think a lot of people over here know about Alibaba. I didn't know about Alibaba until you showed me it.
Yeah.
I had no idea about it.
Yeah, it's one of those. It's so region specific. But that doesn't take away from the fact that they've got a lot of power. They've got that government behind them. Yeah. And Jack Ma is a smart guy running that company.
Very smart.
Alibaba has come out from basically nothing to worth $100 billion in very, very short order. Yeah. And in a market space that it seemed like Amazon had completely cornered, but they just found a little niche dealing in wholesale and stuff. And they were able to build, and now they're spreading out. They've got an entertainment division. They literally, you look at a lot of the stuff that Alibaba does, and it's very much correlated to the same things Amazon does on this side of the water. So you wonder, man, there's going to be, at the top end, globally, there is going to be a bit of a power struggle between these two at some point.
At some point.
They are going to end up head-to-head at WrestleMania at some point, the two of these guys. Invesco closes a deal on Guggenheim's ETF business. We talked about this a couple of months ago when this offer happened. This finally closed for $1.2 billion as Guggenheim gets out of the ETF market. Invesco, obviously one of the big guys in the ETF business. Invesco's ETF unit is moved up to assets under management of $215.3 billion as they add in the $38.8 billion that they brought in from Guggenheim, just in ETFs. Yeah. That's just assets under management in ETFs. So Invesco, they're trying to corner the market as it is more and more difficult to make money in the investment field because everybody is starting to find out that a lot of these costs that are built into mutual funds and ETFs are hooey. Yeah. And that you shouldn't be paying them. And people like the guys over at Vanguard do a very good job of letting people who are willing to listen, who don't just aimlessly walk into a bank and sit down with an advisor and take anything that they're handed. But if you're willing to go around and shop, you realize that a good amount of these ETFs or indexes that are available out there are put together. They're not really, they don't have to be managed. I don't need to manage an ETF that's a semiconductor. It's all the semiconductors.
That's right.
There's no managing that needs to be done.
All encompasses.
Yeah. So you pay a lot more when you deal with companies like this. So the assets under management are great, but as an investor, I would say take a little more active approach, and you can find much cheaper ways to be invested in similar things or exact things through other companies. So Invesco, good, but MER is still quite a bit high. WestJet, March traffic up 6.5%, capacity up 5.2% to 2.815 billion available seat miles. WestJet up here in Canada is flying the friendly skies.
That they are.
Yeah, things are going up. Apparently, March traffic continued to climb despite bad weather all around the nation.
Yeah.
We had a prolonged winter, but didn't make a difference. March traffic still up. Wells Fargo, 5% of their $55 billion auto loan portfolio. So 5% of that is under scrutiny. Customers had extended warranties, roadside assistance, and tire protection folded into their auto loans that they were not made aware of and then charged for. So Consumer Financial Protection Bureau is seeking $1 billion from Wells Fargo. Wells Fargo's had a few issues the last couple of years. They need to really figure things out because they are getting, between them and Citi, there's a lot of bad media out of these two banks. This is, I mean, honestly, just folding in insurance and stuff into pricing and not telling people and then charging them for it.
Shifty.
You're big enough that you don't need to be doing that. You're Wells Fargo.
Yeah.
Right? You're not some little rinky-dink company running out of a, strip mall somewhere in the middle of nowhere. You're one of the oldest banks in the world.
Trying to bleed you dry, though.
Yeah, for real, right? Like, that's a bad way to try to make small margins.
For sure, definitely.
Yeah, you're not supposed to. You've already got people loyal to you that use you. You don't want to burn them. You're trying to bring new people. You're scaring away the guys you got. Let's see, what do we got? Celgene, Agios Pharmaceuticals, and Johnson Therapeutics are both potential acquisition targets of Celgene, apparently. This is rumor. Obviously, we heard this early in the week. Agios Pharmaceutical and Johnson Therapeutics all have conjoined medical business going on with Celgene, where they've got drug programs going on using a Celgene drug and then a drug from Agios and a drug from Johnson, all in FDA approval stages right now. So they've got vested interest in both these companies as they're already in fairly tight working arrangements with both of them. So to acquire one or to acquire both of them wouldn't be too far out of the realm of possibility. R&D spending for the fiscal year in the United States looks something like this. Amazon, for the last fiscal year, spent $22.6 billion in research and development. Alphabet, $16.6 billion. Intel, $13.1. Microsoft, $12.3. And rounding out the top 5 publicly traded companies in the United States spending R&D money last year, Apple at $11.6 billion. And you gotta wonder, with all those companies that all come out with crazy new products that change the world all the time, almost every generation they have one in one sector, all of them, you wonder, with all those billions spent this year, what did they come up with?
Yeah, what kind of hidden gems do they have?
I'm telling you, right? Disappearing cloak or something.
Oh, for sure.
We're going to get something good. Bayer Monsanto, approved by the U.S. Justice Department. Obviously, we know that Bayer's going to sell a couple of their things to bring on a couple of the Monsanto things so they're not taking on too much of a market space.
Yeah, Bayer has to sell their agricultural and biological sector, I'm pretty sure.
Parts of it, yeah. Certain seeds.
Bioagriculture.
Yeah, certain seeds and stuff, the rights to certain patents have to be sold. They've got an agreement with BASF that's going to be taking on a lot of stuff. There's a few other things that I think that they're going to be making adjustments on that they agreed on to get this done. So I think there's actually a few other things that they're actually expected to go ahead and move off. That's a
finer detail.
That's outside of that BASF deal. That's going to get everything done and have them dot all the I's and cross all the T's and eventually have this Bayer Monsanto merger that's been going on for a couple of years finally said and done. The WWE Network hits a record of 2.12 million subscribers after WrestleMania last week. That's up 9% year over year. WrestleMania was also the New Orleans Superdome's highest grossing gate at $14.1 million. professional wrestling, in a nutshell, is still doing pretty well from the WWE standards.
Yeah, oh yeah.
We'll see how it works out as Vince McMahon starts spending his time on football again.
Oh yeah, let's hope not.
In the United States, speaking of air traffic in March, United Airlines reported some of their traffic up 6.5%, just like WestJet. Capacity up 3.8%. So in March, continuing, airlines in the US and Canada are moving around, and they're moving around at a higher rate than they were a year ago, which means people got money, people are flying, people got places to go, probably got some important business meetings, or who knows where they're going, right? So air traffic is up all around. Mattel is closing their New York offices as a part of a $650 million cost-cutting plan. Mattel had a negative $1.08 a share Q4. It was brutal last year for Mattel.
Yeah.
A lot of their outlets like Toys R Us and stuff have now gone away, and they were already having issues with their own actual brands selling. And now the shelf space where they were selling those brands.
Matty Collector, they had trouble with that. I think they got rid of that thing, Matty Collector thing. Now I think they got rid of them. Don't quote me on that. And now they're losing that.
Yeah,
the 640 million.
Yeah, well, they're trying to cut 650 out of the business, right? But like they're closing down New York offices, and when you've got your New York office, that's going to be one of your. That may not be where you're headquartered, but that's going to be one of the big cachet places because you're in the Big Apple, and everybody's got an office there. And when you start losing those type of that type of landscape, that type of real estate, you do start looking like you're failing.
I think I
think Mattel needs to really bring it back in-house and reevaluate and maybe cut some of these brands that aren't making the money, streamline this business, because the toy business has changed since the 80s.
Exactly.
And it's time to get with the times, or you're going to be a blip on the radar.
I don't know if Mattel could turn it around. I don't know. I know Hasbro has, I think, majority in what they do in the toy sector. I don't think Mattel can keep up with them, because Mattel really has, like, they have Barbie, sure, they have the wrestlers, but they don't even really have He-Man anymore because they kind of like sold the license off.
Let's not undersell Barbie, and Mattel also has Hot Wheels, and
true.
I mean Mattel has a lot of strong brands, and I mean if you were to take that company for what it is now, struggling, not really doing much, but to take a look at their actual tangible book value and what those brands will be worth in goodwill when you go to sell them, people are going to pay a massive premium to get a hold of the brand name and the history of Barbie, Hot Wheels.
Oh, yeah, for sure.
So Mattel, their shareholders can't be happy right now with where the company's headed, but they do have to rest sort of easy knowing that if this company had to be broken up, as opposed to like Toys R Us, which is all just a bunch of brick and mortar nothing.
That's right, yeah.
This company has strong brand names that retain value, and if the company has to be sold, there will be a hefty premium paid on retaining or bringing in those brand names, because you're going to be able to do something if you own the rights to everything ever that Barbie did. So don't think that a company like Disney or anything might not be taking a look at this.
Oh no, that's very true. Yeah.
Just saying, there could be a lot of companies that could be looking at this thinking like, maybe the toy business isn't really where it's at. Maybe it's just bringing in the actual trademarks and brands and using them in a better way than Mattel's maybe been using them. Maybe Mattel has been underutilizing strong brands for too long, and that's why they find themselves pigeonholed in such an area, because they've just been so focused on just toys that they haven't been using those brands to expand like some other people might use their brands. Boeing. No, we talked this.
Yeah.
I'm not telling you about Boeing anymore. You know once, that's the one time.
I already know it.
You're Ant.
I am Ant. This is my company.
Okay, so Ant Financial. Again, we talked to Alibaba earlier. Alibaba affiliate Ant Financial plans to raise a moderate amount, $9 billion, in their latest round of funding that could bring the soon-to-be public company to a value of roughly $150 billion.
Wow.
Again, this is Alibaba's this is their banking department. Alibaba, again, in everything. That would make Ant Financial worth more than Goldman Sachs, PayPal, or BlackRock.
Wow.
So
that is news.
Go.
That is news.
Now, obviously, they're not on the same level as them, because when you talk about a company like BlackRock, who we're going to get to in the earnings, BlackRock has $6.3 trillion assets under management, but their actual market capitalization would be worth less than this Ant Financial.
Yeah.
Obviously, this is over in Asia. We get very little information. It's not something that we're privy to the whole big breadth of things. But clearly, anything that Alibaba is attached to, people are willing to throw money at to get these things going.
Oh, yeah.
Ant Financial going public probably quite soon. Sprint and T-Mobile restart, merger talks. And when we say Sprint and T-Mobile, we mean SoftBank and Deutsche Bank. Since those merger talks cooled down a few months ago, we know that SoftBank capped out on the amount that they could buy of Sprint.
That's right.
Without having to commit to buying the full thing. They're right around the 85% mark of ownership. They made a big investment in Uber since that merger talks stopped. But you got to imagine that Deutsche Telekom and SoftBank, they're looking to get this together.
Yeah.
Because it's in the best interest of both of these companies. I think Verizon and AT&T are so far ahead in testing this 5G network that I think that's probably the thing that's really getting both these companies antsy, is the fact that they're already given, especially T-Mobile, a lot of leeway, let's say, in the way they're allowed to aggressively advertise for customers through the FCC as opposed to the other big companies, so that they can take some market share. They get together with Sprint, they're not going to be given that ability anymore. But I think getting 5G up and running is much more prudent than worrying about the little bit of stuff that might make you more competitive. What's going to make you more competitive against your competitors is being better.
That's right.
Yeah. Airbus is building, hey, this is a good story. Airbus is building lie flat beds for lower decks of its aircrafts.
Nice.
So initially, it's going to be offered on the A330s starting in 2020. Zodiac Aerospace is working with Airbus on the design. So in the actual cargo hold, I guess it would be probably people in first class would have the option, instead of having a chair that arcs back a little bit, you could actually go down and sleep inside what I imagine would be a nicely designed little bedroom set up for people in the Airbus A330. So look forward to seeing that in 2020. I can imagine that that's something we're going to see Boeing getting into quite quickly as well.
Oh, I imagine so,
yeah. You're going to start to...
You want a real Dreamliner? There's a bed down below.
Exactly. Activist investor and man who makes a lot of news. We spoke last week about Icahn. This is probably Ackman's arch nemesis, at least in the past it was. I'm sure they've come to some at least mutual respect agreement at this point. But when they were going at it over Herbalife, it was really interesting back in the day. Carl Icahn is reselling used cars to Uber and Lyft and other ride-sharing companies. Icahn has major holdings in Pep Boys, Auto Plus, Amco, and a large stake in Hertz Rental Car. Icahn plans to leverage the roughly 4,000 repair shops that he owns to fix relatively new cars and sell those cars back with like full certification and all that kind of stuff at certain prices, obviously given probably a discount, and trying to work in agreements that would have Uber send their actual employees to Icahn first as this is your first place to go to look for one. You'll get a better deal here. So Uber, Lyft, etc. Carl Icahn trying to get into the market where he's going to be facilitating the vehicles that these companies get, which is probably a lot better than your Uber ride-sharing plan now, where you get into a 1996 Toyota Tercel that's got the
never seen again,
got the spare donut on the front, and you know you're going to the airport at 100 and going like, are we going to get there? So yeah, Mercedes-Benz. You want to talk about another interesting story? Mercedes-Benz has a pilot program that's going on in Nashville and Philadelphia that's going to have a luxury vehicle subscription service. So you're going to basically go into Mercedes, and for a certain fee, you're basically going to lease a vehicle.
Yeah.
But you're not going to lease a specific vehicle.
Oh, okay.
You're going to lease the tier of vehicles. So across this tier, there's 4 vehicles available, all the different colors, all the different options. So you're going to pay whatever the fee ends up being on a monthly basis, a recurring, that's going to probably be in the thousands, because this encompasses roadside assistance, it encompasses insurance, so it covers everything that you're going to need right through Mercedes. But it's going to allow you, as your life changes. This week we're going on vacation. I'm going to need a couple more seats. I'm going to need to be, maybe have some off-roading. I need a 4-wheel drive.
Wintertime?
Wintertime. Whatever your lifestyle or needs change, you're going to be able to pick up that vehicle. Then as simple as going into your Mercedes app, you're going to be able to talk to the dealership through your app and let them know, hey, tomorrow I'm coming in and I'm bringing the SUV back and I'm going to be taking the luxury sedan because I've got business all week. And you're going to be able to do this through this subscription plan, obviously just being piloted in Nashville and in Philadelphia right now.
Quite tantalizing, though.
What a good, I mean, if you've got the money.
For sure.
And it gets you in, I mean.
You get multiple vehicles to drive? Like, come on.
And what a cool way to have your clients fall in love with your brand even more. And they don't get to just drive one of your luxury vehicles over the course of a calendar year. Yeah. They'll probably drive all of them.
And in this essence, they kind of changed the market and how you deal with cars or selling cars.
I'm telling you, I saw that and I thought, how have we not thought of that? Like, obviously, there was a real price structuring thing that they have to take into consideration with vehicles changing hands so frequently, the paperwork and all the logistics and all that. But obviously, Mercedes seems to think they must have a good majority of it worked out. If it can actually take off, I don't know if it would work in the cheaper vehicle aspect, but for people on that level, where you're talking a Range Rover, you're talking a Mercedes or a BMW, I could see this being something that very easily takes hold in almost every, if not all, Mercedes dealerships have this available in all cities.
Oh, for sure, definitely do that.
$1,700 a month or whatever it is to be on that luxury tier. Feel free to take whatever car you want.
I wonder how that's going to deal with your insurance. You're going to have to change it over.
No, you've got the insurance through Mercedes.
That's right.
They encompass the insurance too, right? So basically, all you're doing is switching one vehicle to another. By the time you show up, they're already expecting the changeover and already have it, I guess, in the system. So you come in, a little bit of paperwork. Bob's your uncle. You're out the door with your new car, fully insured, no problem. All done under the Mercedes roof. So
sounds like a bunch of smart cookies over there.
We're gonna see how this plays out, but it's a very interesting story. The Canadian oil industry. That's us.
That is us.
Yeah, we're way overhedged up here in Canadian oil. It's ridiculous. Yeah, it is. Yeah, energy and financials make up 2/3 of our marketplace up here. Expected to turn a profit in 2018 for the first time in 3 years. They've lost $32 billion, the industry, over the last 3 years. They're expected to make $1.5 billion in profit this year. So at least they've turned the corner, but I don't see the Canadian oil industry ever getting back to where it was. There's that extra step in refining, and regardless of the infrastructure being built, we've got the Kinder Morgan pipeline between Alberta and BC. It sounds like we're going to have some sort of resolution on that. I know we were having Premier Notley here in Alberta was having it out with the Premier in BC. The BC Premier is not having this, but Trudeau got involved this week and finally did something for industry in this country.
Oh, really?
And sat down with the two premiers trying to hash out an agreement so they can get this pipeline built and start moving this stuff out to the ocean like they should be doing, which I'm sure Kinder Morgan and TransCanada and everybody else are happy with, because legislation on pipelines is just so backlogged, it's ridiculous.
Oh, I can imagine.
But Trudeau actually got off his keister and did something for capitalism.
It's about time.
It's about time. I think it was just because both premiers were ready to choke each other that I think he thought he needed to get involved.
They should just choke Trudeau.
Yeah, he should just be more proactive and see these things through before conflict arises. He should be the standard bearer for our country, going, no, we're moving forward with industry.
And he's definitely not,
he's the last guy to the party all the time.
He's a laughing stock.
So Elon Musk, one more story there. Based on Series 1 financing over at SpaceX, SpaceX is going to be selling some shares in their Series 1 financing. The shares are being priced at $169 a share. That's implying that if all shares of SpaceX were sold at that value, the company would have a value of $23.7 billion right now. I wonder how SpaceX is going to make any money.
Oh, yeah, no doubt.
Bit of a money pit.
Aliens.
Yeah, they're going to have to bring aliens back.
Yeah.
Aliens with pockets full of gold.
Yeah.
Because it's a money pit. It's a lot of money spent. Did NASA ever make money? I'm not sure if NASA was ever trying to. They were allocated a budget, but I don't know if they were ever trying to turn a profit. But is there any kind of money in this? At some point, if you can ever get to where you can
go to the moon or Mars or anything, you can mine there and stuff like that.
You can pull resources back, but I mean, how many years is it going to take before we see a turnaround? Like, if SpaceX goes public, you wonder. Elon Musk is now paying attention to two vastly different publicly traded companies, both in very emerging markets. I mean, one's a car company but trying to be a tech company. One's like a space company, which is about as emerging as it's going to get. He's spread so thin. One of these companies is not going to turn over any type of money. So how does an investor rationalize with themselves, on getting into SpaceX on what would be the ground floor, the launch pad.
I think if you're an investor in SpaceX, you kind of got to love that industry. You got to kind of love going to space and imagine what the future holds and not kind of what you can make off of it right then and now. I think when you're investing in a company like SpaceX, you're looking at a more broader and bigger picture than
So you're thinking long term, like you put...
How is this going to change humanity?
You put a maximum 5% of your portfolio into this, look at it as speculative, and expect that there's not going to be anything for
don't dump everything in
10
it.
years.
Yeah. This is your little fun kind of a stock.
Yeah.
You just want to see where it goes.
This is your
version.
Really
care.
This is your version of Bitcoin, or
very true.
Yeah, you're picking this as completely speculative on the pretense that these guys might make money one day.
Right. Yeah.
One day. I'd love to see what their actual profit model looks like at SpaceX.
Probably 0.
Yeah, I would imagine the profit model is pretty standard, eh?
Imagine they have a big cash burn over there.
We keep pouring money in until we figure out space.
Yeah, exactly. That's it. Well, that wraps up the headlines.
That's all I've got. I mean, I could make up more. Would you like? I could.
No fake news.
No fake news.
No. But we can move on to headlines.
No, we did headlines. You're just repeating yourself. We're doing earnings.
That's right, earnings.
Yeah. You want to plug that thing in again? You working on that properly?
Yeah, no, that's good.
Did you do it okay over there?
Yeah.
Keeping it together?
I'm good,
Do you want to hear headlines again?
No, not headlines, earnings.
I meant
headlines.
That Novartis story?
Yeah, let's do it all over again. Let's do it.
That Novartis story is really interesting, actually.
It is, really.
Weaponizing a virus to send in the proper gene to fix a corrupt gene. Yeah. Imagine if that works. Ray Kurzweil, man, I'm telling you, he's talking about nanotechnology, that we're going to be basically, living to infinity by 2035. This is the kind of stuff where you look at it and go, when one of these finally ends up working and gets full FDA approval and goes to marketplace, you're talking about being able to change a person from the inside out, like change their actual, the structure of their DNA. That's amazing.
It is. Oh, it definitely is. Yeah.
Think about it. Where we were 80 years ago, 90. We stumbled upon penicillin.
Oh, yeah, no.
And now we're sending in weaponized viruses to change genes.
We've come a long ways.
I'm telling you, people do not. We are living in the greatest of the great times.
Sure, we are.
Earnings. We had a lot of earnings this week as we get earnings kicked off, mostly out of the financial sector. People thought they were better than I actually did when I looked at a lot of the numbers. I was actually kind of not super impressed, but the market, I guess, liked it. We do see a lot of the tax cuts coming into effect, helping revenue numbers, EPS numbers, but I wasn't blown away. I was expecting better stuff than this. I see a lot of down segments across the board, like not one company, but everybody seemed to have a couple of hiccups, and nothing stood out as like, wow. So Bed Bath & Beyond, $1.48 a share, beat by 8 cents, $3.71 billion in revs, beat by 30 million. That number's up 5.1% year over year, as Bed Bath & Beyond is probably pushing that Beyond thing.
Yeah.
Yeah, because I've got a bed. I've got a bath.
I don't have the Beyond part,
I don't have anything beyond.
We do have a Bed Bath & Beyond here.
I wonder if you walk into some sort of like weird vortex portal when you go to the Beyond section.
Maybe.
Yeah, you go in there and that's where like SpaceX is.
Yeah, for sure.
Right? You're like in some anti-gravity sort of thing. Yeah, that's...
We have to go to that.
We got to start going to Bed Bath & Beyond. Show us where the Beyond section is. PNC Financial, one of the burgeoning banks in America, a retail bank that is definitely looking to get on that level of the really big guys and doing a pretty good job recently of finding their way there. This quarter, though, saw a bit of a pullback in everything that's kind of been going the right way. $2.43 a share for earnings. That was flat with analyst estimates. $4.11 billion in revenue, missed by $50 million. Now the rev number is up 5.9% year over year. But total revenue inside the company declined 3% on the year. Non-interest income went down 9% on the year, and assets under management fell from $282 million last year to $277. So they lost $5 million in assets under management. And the year previous, in 2016, from 2016 to 2017, they jumped considerably, like the $30 million of positive asset under management growth. So declines in a few different areas at PNC, and I get the assets under management to an extent because people aren't doing much trading, but the idea that people are actually pulling capital out and no capital is coming back into that segment has me a little concerned. And when I look at that, it reaffirms that PNC is definitely still on a whole other tier down. So getting into the big boys, JP Morgan, $2.37 a share, beat by 8 cents. $28.52 billion in revenues, beat by $860 million, up 10.3% year over year. Tangible book value per share went up 4%. That's a good number. Lending was flat. A 7% decline in investment banking revenue, and wealth management assets up 9%. So a little bit of a mixed bag, but when you get down to the nuts and bolts, tangible book value increased 4% a share. If you were to break a company down into the absolute bare bones of it, tangible book value means the things you can actually sell. They obviously have things that are gaining price, there's things are growing inside the company, not just assets under management or their wealth management revenue, how good they're doing at their desk or whatever. This is actually the assets the company owns is growing as well, making the company a lot more robustly valuable in the marketplace.
I like that word.
Yes.
Robust.
Citigroup, $1.68 a share, beat by 7 cents. $18.87 billion was flat with estimates, up 2.7% revenue year over year. That revenue number a little low for me for how big Citigroup is. Global consumer banking income up 40%. Deposits up 4% to $1 trillion. Loans up 1% to $673 million. Institutional client group income up 11%. Up over at Citigroup. I'm not a huge fan of the bank per se. They've made a lot of egregious errors. I think they probably could have sidestepped in the past, where it almost seems like they're like just kind of delinquents. So I wonder about them. Like they just kind of fall into the middle of the pack of the major financials for me. But these numbers were nice. These were probably the best numbers I pulled out of the numbers on Friday. Wells Fargo, $1.12, beat by 5, $21.9 billion in revs, beat by $160 million, but down on revs year over year, 1.8%. Total loans down $9.5 billion to $947 billion, mostly due to stricter consumer loan policies. So we were talking earlier about homes and maybe getting loans easier.
Yes.
Wells Fargo taking a bit of a loss in the loan department, but being stricter with their actual policy might be smart to hedge your bets. For sure. Say we don't need to have all that stuff out there if we're just going to have to go try to reclaim it for pennies on the dollar anyways later, right? Smart thinking. BlackRock, the absolute biggest of the big assets under management places, $6.70 a share, beat by 30 cents, $3.58 billion in revenue, beat by $210 million, and that number, like usual, up double digits, 15.9% year over year. Like we said, they manage $6.3 trillion. Long-term net inflows of $54.6 billion. That was down 50% from the previous quarter. So still big inflows, but down big time. That's a big draw. I think very few people are entering the market at this point. Operating income up 20%, so that's excellent. And iShares inflows of $34.6 billion, down 40% as well from the previous quarter. So again, a lot of it just not a lot of people moving around. Everybody pretty steadfast where they are, which I think is the smart thing right now.
Yeah, I think so. Yeah.
Stand pat. Analyze the marketplace from afar until you feel there's a good entry point and you feel comfortable. I wouldn't rush to put my money in the game if you're not in the game already. The final earnings call of the week, Delta Airlines, 74 cents, beat by a penny, $9.76 billion in revenues, missed by 80 million, but up 8% year over year, sir. How was that podcast?
Awesome.
That was good, right?
That was really good,
We put it in like we usually do. Yeah. And you know who put it in with us? The market.
For sure.
Lots of good headlines. We're in the thick now of earnings season. You're going to expect Goldman Sachs and everybody next week. I'm loving it. We're back to where the news is getting good. The weather's getting good. I feel good. You look good. Yeah. We are doing excellent. I'm Cody from Wall Street Breakdown.
I'm Anthony from Wall Street Breakdown.
We thank you again for joining us, and we will see you again next Sunday.